The stock market is in a tug-of-war between optimism and caution, with one sector celebrating record highs while another stumbles over unexpected setbacks. But here's where it gets controversial. While the Nasdaq Composite defied the odds to hit a new all-time closing high, the S&P 500 and Dow Jones slipped, dragged down by a major pharmaceutical stocks collapse. What's fueling this split-screen performance? Let's break it down. The big picture: a market split in two. On Thursday, the Nasdaq Composite surged 0.35% to 21,242.70, marking its 17th record close of 2025. Meanwhile, the S&P 500 dipped 0.08% to 6,340.0, and the Dow tumbled 0.51% to 43,968.64. The divergence? A perfect storm of corporate news, political maneuvering, and economic data. Eli Lilly's drug data shockwave. Eli Lilly, LLYN, became the day's poster child for volatility. Pharmaceutical giant's shares plummeted 14.1% after late-stage data for its oral weight loss drug, orforglipron, failed to meet expectations. Investors had been banking on this drug to become a blockbuster, but the results left them scrambling. This single stock's decline accounted for a significant chunk of the S&P 500's losses. Trump's tariff gambit and the Fed drama. Just as the market was digesting Eli Lilly's news, U.S. President Donald Trump dropped another bombshell. He announced his intention to nominate Stephen Miron, the Council of Economic Advisers chairman, to fill the remaining term of Federal Reserve Governor Adriana Kugler. Miron's appointment, set to last until January 2026, adds another layer of uncertainty to the Fed's leadership. And this is the part most people miss. Trump has been openly critical of current Fed Chair Jerome Powell, accusing him of delaying rate cuts. Could Miron's nomination signal a shift in monetary policy? We'll have to wait and see. Tech's resilience versus cybersecurity's woes. While the Nasdaq thrived, not all tech stocks were winners. Fortinet, FTNTO, saw its shares nosedive 22% after the cybersecurity firm issued a revenue forecast below Wall Street's estimates. Meanwhile, Apple, APLO, rose 3.2%, buoyed by Trump's decision to exempt major tech companies from a 100% tariff on semiconductors. This move spared firms like Apple and Intel from a potential tax hike, but it also sparked questions. Is this a backdoor way to protect U.S. tech giants while punishing smaller players? The job market and rate cut hopes. Economic data added to the mixed signals. Weekly jobless claims rose to 226,000, the highest in a month, slightly above economists' forecasts. Yet market expectations for a September rate cut by the Federal Reserve remain strong, with a 93.2% probability of at least a 25 basis point reduction. For the uninitiated, a basis point is 0.01%, so 25 basis points equals 0.25%. This suggests investors still believe the Fed will act to cool inflation without choking off growth. The bigger question: who's winning? The day's events highlight a key debate. Are Trump's tariffs a smart move to protect American jobs, or are they sowing chaos in the market? Consider Intel, INTCO, which fell 3.1% after Trump demanded the resignation of its new CEO over alleged ties to Chinese firms. Meanwhile, Apple's exemption from tariffs shows a clear double standard. Should the government favor certain companies over others? Share your thoughts in the comments. Do you think these policies are helping or hindering the economy? Final take: a market in transition. As the S&P 500 hits 15 record highs this year and the Nasdaq races toward its 18th, the market's resilience is undeniable. But with political tensions, corporate volatility, and economic uncertainty, the road ahead is anything but smooth. Will the Nasdaq's momentum continue, Or will the SP 500 struggles drag the broader market down? Only time will tell. What's your prediction? Let's discuss.